Hey everybody, what's going on? My name's Andy. My channel is Finding Value. If you like making a bunch of money, any money, whatever it is, I can help you, especially if you have questions, leave them in the comment section. Give me a thumbs up if you like this content. So today we're going to talk about cheetahs gone wild. And I'm going to look at a bunch of different big chart patterns. Perhaps some of them are not just stocks, but we're going to be looking at some other things as well, some ratios, some dollar currency stuff, just to see what it says and looking at history and see if we can project some of this stuff going forward. So let's jump in and look at the cheetahs gone wild. So again, these are big trend patterns that I'm looking for. Bigger patterns mean bigger moves. And cheetahs released to the wild are free to run, and that's what breaking a chart pattern. That's why I refer to these cheetahs, because they like to run when they break their chart patterns. The chart pattern containment ceases to exist on the price, and then the price runs. And again, this is a reminder, this is financial education only. What you do with this information is your responsibility. So I've got Cal in full cheetah mode. That's Cal in petroleum. I did think it ended a little bit lower than where it was midday. But good job, Cal. Way to run. Once it breaks out of its little pattern, I think it's really gonna move. Now, I want to start with the pound-dollar ratio. So on this channel, we look a lot at ratios. So we're looking at the outperformance and underperformance of two assets against each other. It's relative value, and this is relative currency valuation. And you can see this was the last bull market in commodities. And remember, commodities are priced in dollars. So we would want to see the pound get stronger against the dollar. So it would go up. Then when it comes down, that means we're out of a cycle here. It means that the dollar is stronger than the pound. So whenever the pound is stronger, when the pound is outperforming, it's going up. Commodity cycle here, and we're throwing a commodity buy cycle here. And it just so happens that the pound-dollar ratio, this is at the bottom of its channel, is right there at the bottom of its channel. And we've got another support line here. So what we're seeing is the pound moving on back up, signaling a commodity bull market in a weakness in the dollar. So it is relative. It is showing us that, hey, look, we've got a cheap commodity valuation down here, and that the dollar is actually getting weaker in relationship to the pound, which means it's game on for commodities in my mind. Now let's look at the dollar to Swiss franc. So whenever this guy's going up, the dollar's getting stronger. Whenever it's going down, the dollar's getting weaker in relationship to the Swiss franc. So last bull market lasted from about 99, 2000, right here. And this was also the expansion phase of real estate tied into this. Shoulder, head, shoulder, kind of like a triple top deal. Broke out of its uptrend all the way down to 2008. That's the bottom of the cycle for the majority of the commodities. This was the bottom of the cycle for for gold and precious metals. So you can use this and even this as an indication of when you should be selling or buying commodities and precious metals. And as you can see, we broke the uptrend, this little uptrend here, broke to the downside, and we're heading back down, which means the Swiss franc is outperforming the dollar, which is very bullish for commodities and precious metals. Next chart, gold to platinum ratio. And what this ratio, when this ratio, it was coming up, and we got into this big chart pattern, bearish engulfing, big old bearish engulfing. We blew out the downside here. What this means is that platinum is outperforming gold. When platinum outperforms gold, it means that commodities are game on. If you noticed, I started the channel in September because I saw this chart pattern and I was like, ooh, a commodity bull market was going to happen. So I wanted to help everyone out on YouTube, and I started a channel. And this was the reason, or some of the things that I saw when it was coming. So I started getting charts and companies and all these things for people on the YouTube channel, this channel. And if you like that stuff, please subscribe. But when this breaks to the downside, it means that commodities are game on and that eventually stocks are going to be out of favor. Whenever platinum outperforms gold, stocks are out of favor. And really what it is it's just charting basically that you're at the end of a recovery phase and entering an expansion phase of real estate. That's what this is tied to. And that's what a lot of the people miss in the financial education realm. So when you read their articles, you can tie this to the real estate cycle, and this all makes perfect sense then. But we've got this ratio. It is declining, which means platinum is outperforming gold, and that it means that stocks are going to underperform and commodities are going to outperform. Next is the gold to silver ratio. We are right there. I think this thing's ready to pop. I think silver is going to outperform gold quite substantially, and I would be very much in the silver, not just physical silver, but physical silver and the silver mining companies. I do think the mining companies have an expansion, just a blowout move to the upside coming up soon when silver breaks. And I think it already broke. It's just a matter of time before this goes up, in my opinion. Now here's Endeavor Silver. These are some of the picks that I like in the silver area and commodity area in general. So they're all jumbled together. They're all commodity companies. Endeavor Silver is a silver company. Brent Cook. Brent or Brad? I think it's Brad. Brad Cook is the CEO. They're down in Mexico. They're still exploring. They're still proving up reserves. They're a producer, and I like the company quite a bit. We got a cup and a handle forming. It's right there, and this thing's going to break. And this is a decade-long pattern basically, and it will move very far away from the $4.83 that it's at. Next is Mosaic. Mosaic is a fertilizer company. This is a weekly chart pattern. Goes all the way back to mid-2000s, 2008, which is the last bull market. All the way down, and this was the blow-off bottom here. Now we're coming back up. I think we're going to break this at some point soon, and this is going to be an excellent company to be invested in. I think it's going to absolutely crush it. So that's Mosaic. Archer Daniels Midland, same thing. We're in this. Remember, this is a weekly, this is over a decade-long chart here. We've got this pattern moving up. We broke this pattern here, and now we're just hanging out between these two. It will break to the upside. Food will get more expensive in terms of wheat, soybeans. Now, I don't wish this upon anybody, but that's what the market cycle is. That's where we're at, and we have to adjust accordingly. Mag Silver. This thing's looking fantastic. We broke out. It's just sitting there. I think this is a great one to get into if you like Mag Silver. This is a huge chart pattern. Broke to the upside. It's ready to go. VALE, Diversified Mining Company. They mine nickel. They're one of the larger nickel companies in the world. They also have a lot of iron ore. But this thing broke its large chart pattern. This thing's ready to move. This is a cheetah. You can even look at the flag. This looks like a snake flag, doesn't it? Little snake flag hanging up. And then it's just going to probably continue move to the upside. But it looks really good. Hecla Mining, silver company, gold and silver company. Right there, ready to break a 40-year chart pattern. This thing's going to be ridiculous when it breaks. UU. Now, this thing's kind of funky. We've got this nice little kind of U-shaped pattern. Now, is this thing just going to go like vertical? I don't know, maybe. But it back tested here off these highs, so to speak, or off this, I'll call it resistance line going up, support line coming back. But I like buying off these back tests quite a bit. And I think it's a really good spot there. I talked about it in many videos. Deep Yellow is putting in this like massive, like a U shape and then like a cup and handle basically. It looks like a massive cup and handle. When it breaks the 60 cents mark, my Lord, watch out. This thing's going to go. And here's AG. Again, weekly chart over a decade-long pattern. It is massive. Broke to the upside. Now it's just back testing. I like buying the back tests. That's what I do. So I bought the back test and I own AG. I owned AG before it. I think I bought it all through here on this handle. You know, it's got a cup, a handle, and then a cup and a handle right there. That's a good one. Encore Energy looks like it's going to explode. We're right here in the corner. It's just creeping up right in this freaking corner, squeezing up, tightening up. We got a bullish engulfing right here, which says buyers are going to push this thing to the moon. Well, I don't know if it's going to go to the moon, but it's going higher. We got bullish engulfing down here, bullish engulfing, bullish engulfing, bullish engulfing, bullish, everything. So I think this thing's going to go to the upside, but we'll see. Next week will be a fun one to watch with Encore Energy. Trilogy Metals finally locating its nuts and not afraid to use them. So we've got a bullish engulfing here. So this is looking fantastic. We have the 50-day crossing the 200-day. Looking back, there's a shoulder head shoulder with a massive chart break. We broke this guy here to the upside. It went sideways on the back test, and it's been going sideways, sideways. This thing's ready to pop. I think it's going to move to the upside very soon. CCJ, again, we broke a huge pattern coming through here, a decade-long pattern, pulled up, pulled back, big move up, the pullback inside of the big up day. Very signature trait of an upward move. We've got the wick on the bottom. I like it. I like it a lot. Nice big volume. Again, North Shore Global Uranium. All these uranium companies are looking very good. Pullback, big move up, little pullback, all I can muster, and I think this is going to continue to move on up. That's my guess. But looking pretty good. Callan Petroleum. We do have a little wick. There's some sellers up here. There's a lot of resistance up here. Once it breaks through this seller resistance area, gone. We got a bullish engulfing here. Got nice, good base to launch from. So it's looking pretty good. That's all I have for today. Looking at those charts, I mean, man, these uranium's looking good. Oil's looking good. We've got massive chart patterns on both of those sectors have massive patterns that are breaking, and it's going to move to the upside, I think. So my strategy, again, has been find the companies, spread it out. Spread your money out because there is a reasoning behind this. I'm going to go over a video on why I spread my bets out and do kind of a mathematical strategy test. And you guys can see why I do it. It's a way to reduce risk, and it's a way to capture the gains from a statistical probability standpoint. I'm an engineer. I don't go too far into the numbers for everybody, but when you look at the numbers, it is quite compelling and I think quite advantageous to do a portfolio allocation where you spread it out amongst a sector, especially with a sector like uranium where there isn't many companies to begin with. And if you look at all the companies and the traits that some of these companies possess, they could all potentially be 100 baggers plus. You just got to say, well, if there's only 7 or 10 of these companies that exist these traits, why would you not own all of them? Irrespective of the debt, irrespective of how much money they need to raise, irrespective of all that stuff, because you can lose substantially on 1 or 2 of those picks. But if you hit just one, and absolutely blow it out of the water, those losses don't mean anything. So it's more of a betting strategy. You can use it in even in gambling. You can use it to reduce your risk and really put the odds in your favor depending on what strategy you use. So that's what I've got for today. Leave some comments if you guys have any questions, and subscribe to the channel if you haven't. Give me a thumbs up, and thank you for listening. This is Finding Value.